Airports. They are a paradox. On one hand, they are the ultimate monopoly, critical infrastructure with impossibly high barriers to entry. On the other hand, most of them are terrible businesses. Why? The answer is buried in one word that almost no investor ever thinks about: concessions. And today, we are going to see how that one word turns a seeming monopoly into a capital trap. Starting off, it's a pretty simple thing. You have a geographic area, you have the flights, the goods, the passengers, and the flow of money. It sounds simple enough. The high barrier to entry, a key element of their mode, is the right to operate an airport. Why do I say right? It's because a business isn't in the ownership of an airport. It's actually owned by that country's government. Why is that the case? Well, it's because this is mission critical infrastructure which can't be taken over by enemy countries. The government needs full control. What happens in that case is that the airport gets built using the company's money, and then, as you can see in this very boring 10K from Corporation America, we can see that it receives revenue from an airport when it sells some services through it. For example, retail stores, the landings and takeoffs of planes, the cargo space renting, etc. This is called a concession of an airport, which means that they have the right to operate and manage those airports. So they aren't their owners. So we could say this is like a capital light company, except it isn't. It's very capex intensive. In 2024, the company spent $155.7 million for their Argentina segment, remodeling and expansion of the passenger terminal at Rio Hondo Airport, as you can see here. In 2023, they also did a large construction of a new departure terminal building at the Ezeiza Airport. That isn't the end of that. Further notes in the report highlight that capex needs to be done as it's outlined in their investment plan, which they showcase to the government. The right to operate essentially converts to obligation in investment. Failure to do so may mean that this can be a breach of the concession agreement, which could result in fees. That could impact the financial stability of the company significantly. For example, here's what they say in terms of the airport in Pisa. NAC is the government entity which approves those expansions. So do you see a problem here? A company's ambitions can be turned down by a government. What that means is that this company might be under huge political influence, being unable to do what it wants. I don't like that. So my gut feeling as an investor is that this is a structurally flawed business. But as an analyst, I don't trust my gut, I trust my system. And when I run Corporation America endpoints to do my proprietary modes and quality analysis, the numbers confirm the story. So what is the impact of this concession risk on the company's mode? My system gives us a clear answer, flagging the mode score at a disastrous 0.4 out of 10. This is a direct consequence of a weak score in revenue durability, a pillar designed to measure exactly this type of structural weakness. Now let's look at the financial quality score, which my system rates at a moderate 4 out of 10. A key pillar of this is capital efficiency. For a capital-heavy business like this, one of the most important measures is the economic spread, the relationship between the return on invested capital (ROIC) and the weighted average cost of capital (WACC). This tells us if the company is actually creating value with its massive investments. My system analyzes this spread, and based on my proprietary scoring model for capital-intensive industries, it rates their capital efficiency as weak. The company is simply not generating adequate returns for the amount of capital it is forced to deploy. This is what I'm obsessed about. Building a system that can take those complex qualitative risks and turn them into a clear, data-driven signal you can see on the screen, in the form of a number. This is a brand new system I'm still developing. If you're the kind of investor who thinks like this, who looks for the deep, structural reasons behind why a business succeeds or fails, then you're in the right place. The best way to follow the journey and get my deep dive articles is to subscribe to my free newsletter. The link is in the description, as well as the free article on Corporation America Airports. Stay focused on the fundamentals. This isn't financial advice.